everybody. It's Wednesday, the 25th of October, 2017. We had some selling here today, but the market finished well off of its lows. I had pointed out a few of these volume-weighted average price levels that seemed like they might have been important, and nothing really stuck out as far as important support or resistance. It seemed like maybe we were going to come down to the volume-weighted average price off of the late September low. Perhaps we hit that in the next couple days, but for right now, we have to look at this market as undergoing a little bit of profit here from the volume-weighted average price from last week's gap low. We're still below that, and I think that's going to be an important level. We've got the declining 5-day moving average as well, so these things tell us that it's time to be cautious. And off the last couple days as well, we want to look at this market and say, we're still below the 2-day volume-weighted average price, below the week-to-date volume-weighted average price. So it tells us that we just want to be a little bit more cautious here. The longer-term trend is still obviously higher. We remain above a rising 20-day moving average, and this prior little consolidation area near 254. For the Nasdaq, we came down to the prior resistance level, and this is the level that we've been talking about, that it would be surprising if we were to break down through that level. We did close right on the 20-day moving average once again, and that came after we saw buyers emerge near the volume weighted average price from the late September low, as well as that prior resistance. So this 146 and a quarter area is going to continue to be an important level to monitor over the next coming week or two. We want to see prices hold above there, but we can't be too optimistic of the intermediate term, not while we're below the declining 5-day moving average. And the volume weighted average price from that gap last week is still right up overhead as well. So for tomorrow, if we see further bounce from here, I would just look at it with an eye of suspicion and think that it remains under a cloud of uncertainty in the near term, but within a longer term uptrend. So we have mixed messages, and that's often what we get during earnings season, that there's going to be a lot of crisscross currents, cross currents, that is, due to companies reporting and various activity on those stocks after the reports. The Russell 2000 did break lower here too. That is, it broke below the prior low from last week, but closed back above it, leaving a long tail here. We are still above the volume weighted average price from that most recent gap higher, so it's tough. It remains tough to be bearish, the biotechs, but from a purely intermediate term perspective, we were looking for the possibility of getting long if it broke this pattern of the lower highs. Instead, we still have, we made a lower low today, and we have a declining 5-day moving average still. So I think it means more that you just kind of leave the Russell 2000 alone, let it settle down, and figure out what it exactly wants to do. You can see that even if you're shorting this market, you've got to be quick because we saw big turnarounds in this market as well, and intraday the volume weighted average price, once that was taken out, did hold a support here today. So just a lot of uncertainty in this market. Semiconductors continue to be the strongest group. They are still, they're only 1 day off of an all-time high here, and they did close even above the rising 10-day moving average. The volume weighted average price from that recent movement in here has twice now kind of found buyers in that general area, and we have higher lows with that. We are below a declining 5-day moving average or flat 5-day moving average, so it just tells us be cautious in here. It's you can't be bearish this market over and over again. It's proved the short sellers wrong, and you look at it and think, well, it's up so much that it has to do this or it has to do that, but the fact is the buyers remain in control of the longer term trend. Biotechs, however, continue to get experience selling, and they're coming into an important level, and that is that we've got the let me just redraw that on this daily time frame. Off the June lows, we've got a trend line that's pretty much getting hit, and the volume weighted average price off that June low is just below as well. This group we were monitoring for the potential of a long, very similar over here to the way the Russell 2000 has behaved with these levels. Now, it doesn't mean I expect the IWM to cave in the way this one did, but it says this is why we are cautious and we wait for actual evidence before we decide to get long a group such as the Biotechs or the Russell 2000, because this is what can happen. So right now it's looking like we're at an area that has the potential to become support, but there's zero evidence of it so far. My suggestion would be just simply to leave the biotechs alone and let them settle down a little bit before getting involved there.